Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking energy, and oil prices continue to rise, seeing that bullish trend continue, albeit with a modest hiccup. We did see oil prices decline about $1.30 today, but subsequently rally. Oil prices have been sort of independent of the rest of the commodities buckets, so to speak. When we see the dollar trade, oil tends to diverge versus the dollar. Today the dollar was higher, oil recovered off its low, so we'll call them both up on the day. Likewise, when you see the metals getting crushed in those commodity buckets today, oil really stood apart from that. And I think that right now we're sort of targeting that $70, $75 area, which we are just below. And as we look back and we try and find some decent support that we can say, well, this is where we're wrong, it remains well below the current market, about $9. You got to get through 60, and I don't even think if you get through 60, it changes really the outlook as much. It just brings you back into more of a neutral area if you get between that 50 and 60 level. I think you need to go south of 50 before you start talking about oil being bearish. Although that's a long way down, so I don't know if I want to hold long from 69 all the way down to 50. But ultimately on a chart, when you look at it, the momentum that we're seeing remains very bullish despite a hiccup here and there. And I think that right now oil prices will continue to ascend higher, not only for the fundamental reasons we hear out of OPEC, but now you're starting to read fundamental and technical, kind of a double whammy there for higher prices. And if you look at what the dollar did today, the dollar was very, very strong, extending some levels that we saw last week. And I think last week when the dollar was spoken of, it was like, yeah, we're seeing these modest upticks in the dollar, but, shrug your shoulders, it'll go back down. It always does, or at least it has for the last year and a half. We didn't see that today. So we see the dollar catching a bid. We see yields in the treasuries rising, but it didn't really have much to do with oil pricing today as oil continues to watch. OPEC, they continue to wait for more news of extension of the production cuts. And I think that right now, the dollar is, it may play catch up later, but ultimately it's not going to affect the short-term outlook of where oil prices are going unless we see another significant shift in the dollar or the dollar index. And we haven't seen that, for a sustained period for so long that, let's wait and see before we write that off. And lastly, let's look at the positioning. Spec longs continue to be at the all-time wides here. They continue to own, be long and own. They don't want to sell it here. They won't turn negative, I don't think, until there's a reason to. And if you go back on the charts, when did they start getting long? When did they get out of those shorts and start getting long? Well, it was right around, October, November of 2016, and oil prices were in the mid-40s. So they've been holding on this whole time, riding this rally with really no reason to sell it yet. While we do talk about the supply numbers, coming off the supply glut, as it's been called, being corrected by some of the production cuts, global demand has continued to rise. So while there is still plenty of oil being pumped out of the ground, I think it's being met with equal demand. And when you talk about the production cuts as modest as they may have seemed a year and a half ago, they're starting to do their jobs. And so I think right now, we're going to have to start looking at, where do these guys going to start to play the range? And they haven't done that. So right now, I think if we get to 70, 75, I think you may some of those longs pair off, looking for just a modest hiccup pullback where they can get back in. It's been such a long rally for oil prices, given the fact that we've had these established longs in there for so long without being scared. We haven't seen that corrective move. Kind of reminds me of the stock market, in recent years where we hadn't seen a real corrective move until we did, and now things are really shaky over there. Oil's a much different animal, but I think that in this case, the longs have been holding on for so long that they may look to pull back here and then move into a lesser volatile commodity, or at least less volatile bucket, until we get through some of these geopolitical risks, some of these growth numbers that maybe are suspect, and likewise see what the Fed is going to do for the remainder of 2018. Because right now the Federal Reserve is still expected to price 2 more rate hikes. A lot of that can change very, very quickly. So right now oil prices remaining bullish as we begin the week, despite a modest downtick overnight. This is Todd Colvin coming to you from the floor of the CME Group.